Hey guys, so today I have a question for you. If you had, let's say, an extra £100, an extra £200, or $100, $200, where would you spend that money in the context of would you send that extra money towards investing or would you send that extra towards paying down your mortgage? That's the question. I have made a video about this before in the past where I was considering what I would do personally, and I am a great believer in doing both. I honestly believe in doing both. I know people have got strong opinions about this, but you know what's so beautiful about this? It's personal finance, and personal finance is exactly that, personal. So whatever answer you gave me at the beginning, it doesn't really matter. That is your personal choice. If you choose to be like, do you know what? I have an extra 100, 200. I'm going to send that towards my investing. You go, you. You do you indeed. But if you were to be like, oh, I'll pay towards extra towards my mortgage, paying it down, again, you do you. That's the beauty about it. So for today's video, I wanted to discuss the pros and cons of each. And hopefully this will help some of you make a decision if you wanted to, or just hear somebody else's perspective. I do have my trusted mobile here because I wrote a little script down, just some bullet points to help me as talking points for this video. So without further ado, let us begin. Hey guys, welcome back to Budget with a July Dreamer. My name is Miranda, and on this channel I share with you everything personal finance as well as lifestyle content in the form of vlogs. Today's video is going to be on the personal finance side, and we're going to be talking about investing versus paying extra towards your debt, towards your mortgage, not just any debt, towards your mortgage. And I'm going to open up my phone right now so that I can have my little extra notes to help me remember and stay on track, because if you watch my videos, you guys know that I can talk for queen and country. I derail myself so many times. Just like I've just done right now. But anyway, let's start off first with paying extra towards your mortgage. So some of the pros that I have written down. The first one that I've written down is for your peace of mind. I think many people who choose to pay down their mortgage, they are paying it down for their peace of mind so that they could be debt free faster or earlier. That is, like, for me, at least that's one of the main reasons why I am choosing to send a little bit extra towards my mortgage repayment, for that peace of mind. I love the idea of having a paid off home, and the only thing I have to pay for is my council tax and the rest of the bills associated with owning a home, but the mortgage not being one of them. I love the idea of being able to hand down this home to the next generation and they don't have to carry a debt with it. Like, all the equity in it will be theirs. That for me is one of the main reasons. The second reason that I have here is I think if I'm able to, let's say I'm able to pay off this home in the next 5 to 10 years, that means that I'll have more cash later to send towards things. Like, for me personally, it will be travel. For you, it could be maybe helping a family member or doing activities that you love. It could be whatever. But for me personally, it's having additional money later on that I can then send towards travel, towards things that I love doing. So that's the second pro that I've written down. And I have also written down this one, thanks to chat, is guaranteed return. This one I had to ask chat to explain a little bit, and they said you save on interest, which is technically risk-free. And I was like, oh yeah, that's so true. Like, when you're paying it down, it's kind of like your guaranteed return, that you're paying it down and eventually you pay it all off. So kind of risk-free, right? But yeah, so that's the third one. And the fourth one is, it depends for this one. If you are on a variable interest rate, this one could protect against future interest hikes. So like a lot of us, like myself, who started their financial journey and understanding finances and getting a mortgage when the interest rates were not point something, it was a great time. And then now we're in the threes, the 4%, which for a lot of us is a shock to the system because we're like, what? Like our interest rates were so low that it was great then, but now it feels like a pinch. And a lot of people are starting to struggle with paying for the mortgage. All of a sudden, the mortgage is unaffordable for them. So that's something to think of. It's a pro because it protects against future interest hikes. So those are the only 4 pros that I had written down. 3 of them, 2.5 are mine, and the other one is chats on, so just so you know. When it comes to the cons for paying extra towards your mortgage, the first one I wrote down here is that unfortunately your money is locked in, so you don't have any liquid money or asset at that point. So once you send it, you can't exactly go and be like, I would like that money back. Well, at least I don't think you can. So that's one that I wrote down. And the second one was if you pay an extra towards your mortgage, you are potentially missing out on earning interest if you had invested that. So there's a potential that you're missing out on higher returns potential. Okay. There's a possibility that you might be, instead of putting that money towards your mortgage, you could put that in the stock market. But that also comes with its own challenges. And we'll talk about that in the next section of this video. But that's one of the cons that I wrote down. And the third one, this one is thanks to chat, and chat said opportunity cost. So inflation erodes the value of saved interest over time. I'll let you figure out what that one means. But for me, I was like, you've locked in your money, which you can never get back. And potentially you're missing out on the returns that the stock market might have returned you. But yeah, so that is, the pros and cons of paying extra towards your mortgage. So you can just think about it for you. Where do you sit the most? I kind of sit on the fence. I am on both sides. So I figured I'll do both. That's what I've been doing. But anyway, let's quickly move into investing instead. So if you chose to invest instead of paying extra towards your mortgage, one of the pros could be that you could potentially, which is something I think every single investor talks about, that you could potentially have higher returns potentially. And they have talked about, the stock market often on a year by year returns you between 7 to 10%, but conservatively people just say 8%. But nobody knows really, nobody knows for sure. I mean, the past data is an indicator of what has happened, but may not necessarily be an indicator for the future. Things could flip on its head, but potentially you could get a higher return than if you just were paying down. For me, I am more about the instant gratification. So I always struggle with this, but make your own decision. The other one is, your money stays liquid, which I love, because you can take money out from the stock market. I mean, it's not recommended when the markets are tanking, but it does stay liquid, which it doesn't if you have sent it to pay down your debt. And also, if you are investing in the future, you may have received a lot more returns from it, that you might even end up using some of that money as part of your retirement. So some of it goes to paying off the home, and then the other monies could go to just help you enjoy life. But that's for the future, but it's still a pro. But that's just something to think about. In terms of cons, investing it's not really guaranteed. Honestly, it's not guaranteed that the stock market will return 7 to 10% because of market volatility. I mean, for those of us in recent times, we have the 2007/8 financial crash, we've got the 2020, and this year the tariffs did a number on the stock market. So there is a lot of volatility going around. So it's not really guaranteed, you know. We hope, but it's not really guaranteed. And then the con is here, chat helped me with this when it said you still carry around the psychological burden of debt. And I think, like I said, for me, I'm all about instant gratification. So as I'm seeing my mortgage balance go down, it makes me really happy. Instead of just putting the stock market where all I'm seeing is this and this, and I'm not really even sure if it will earn enough at the end to pay off my mortgage. I'm hoping it will, but in the interim, I'm all about instant gratification, if I am honest. So that's one of the cons. And then the risk of lifestyle inflation if if your investments are not automated, because like I have had lifestyle creep. I didn't think I had, but I have had lifestyle creep, you guys. Like as my income has increased, I've tried to be smart about my decisions in like investing more in my pension and stuff like that. But I've also increased in the stuff that I buy. So maybe I used to buy the brand here, now I'm buying the top brand because I can afford it now. And maybe now I'm buying things a lot more than I used to, like maybe having more coffees, more takeaways, and all of that good jazz. So there is that part as well. So if you haven't automated your investing, there's a possibility that instead of that money being invested, you may give into lifestyle inflation and not invest it and lose out altogether. So, yeah. But anyway, those are the pros and cons that I wrote down here for whether you should be investing or whether you should be paying down your mortgage. There are a couple of things to consider. Firstly, that I have here is your interest rates on your mortgage. At the moment, for me personally, I've just locked in as of July. I've locked in for 5 years on the same interest that will be for the next 5 years. I must say that I just looked into the tracker today. So my current mortgage balance is 331,200. I think that's what I'll put the actual one. Let me go into the app. Actually, it's easier because then I can take a screenshot now and insert that into this video. But the reason I'm talking about this is because I looked into the tracker between last month and this month, and there's only been a difference of £300. That's the difference that I have seen. And I have actually made a payment of, last month was almost £2,000 and this month was over 1,800, and the difference is just £300, which means the rest has gone to interest, which sucks, but alas, we move. But so this is why, when you look at the interest rates, if you are on variable, then I'll definitely say maybe look to invest in more than paying down your mortgage. But if you're on fixed like I am, I would say definitely invest. If you can send some towards your a mortgage, then why not? But definitely I would say invest. The second thing to consider is your time horizon. Are you doing this for the short term or the long term? So for me personally, I would like in the next 10 years to start focusing on paying off this mortgage, like pay off the entire mortgage in the next 10 years. So that's what I'm looking at. So if I then look at my long-term horizon, this is a long-term goal for me. I don't want to have a mortgage beyond 50, except for the investment properties. For my personal one, I would like not to have a mortgage beyond 50 and just have a paid off home. That's my kind of like overall plan. And then the third point to consider is your risk tolerance. So I often talk to my mom about this. The reason why I don't trade is because my heart cannot take it. Investing, it's out of sight, out of mind for me. It's automated, it does what it needs to do, and the only time I'm looking at it is at the end of the month when I'm trying to write down my numbers for my net worth. Beyond that, I don't really care. I mean, I do, but I'm not paying like everyday close attention to it. Whereas with the trading, the way people behave, and just some people that I know who trade, it's way too stressful for me. It's way too stressful. I cannot do that. So for me, no. So for me, it's more about okay, long term, let's leave it alone, let that investing grow. And yeah, so this is, I think the risk tolerance is more towards your investing, but yeah. And then the other thing is tax benefits. This one for me personally, it's only applicable to my rental properties. To my personal home, not really, because I don't get to remove the interest that I'm paying on my home towards my taxes. So, not really a thing for me. And then it's also another point to consider. It's also about personal values. Do you want to have a paid off home, or you are more than fine just to have your mortgage for as long as you can, and when you retire, just sell it off and travel the world? Like, it depends. What are your personal values? What are you looking to do? And all of that good jazz. So that's all up to you. But what I'm doing, I think I have mentioned throughout this video, and that is I am doing both. And I'm paying extra towards my mortgage every single month. I am doing between, I want to say between 25 to 50 pounds every single month. I am paying extra towards my mortgage. And as of July, I have also started paying investing about 50 pounds into an ISA that down the line I will use as, to pay down the house. So I am going to just quickly, I'm looking down because I've got my phone. I'm going to go into that investment and just like take a screenshot to include in this video, so to see like where my £100, because this is month 2, where my £100 is. I have chosen like a very adventurous fund with Monzo. That's what I'm investing in, and it's very simple. It's not as complicated as my other platforms. This is very simple view, and I love it for me. And I decided to do this honestly because I want to have the option of both, the luxury of both paying down and getting that dopamine feel immediately as I pay down my mortgage, as well as knowing in the back of my mind that in a couple of years' time, I can use all of that money in that pot and just pay a big lump sum towards my mortgage. So that's why I'm doing it. I'm doing both. I am not going to restrict myself to just focusing on one. I don't know what my sorry, not my mortgage advisor, but my financial advisor will say about this. But for now, I'm going to continue doing both. I'm sure he'll have his own opinions, but at the end of the day, it's all about what I want to do. And he can give me a list of why it's a good idea or a bad idea, but alas, we move. So that is the video, you guys. I hope you enjoyed it. If you did, then please give it a thumbs up, subscribe if you haven't already, and I'll see you guys in my next video real soon.